Hi everyone. So the first thing that you should do is watch my earlier video to make sure that you have checked the values on your unadjusted trial balance from part 1 to make sure those are correct. And then you're going to move on to, let's see if I can get this up here, part 2. Now with part 2, which is thoroughly stuck between my two screens, you're going to be working with adjusting journal entries. So I recommend that you go back and review the chapter 3 slide deck, which I have here. So you see on page 12, we start with prepaid or deferred expenses. And the first journal entry we have is an insurance policy that the company purchased on March 31st. That's valid from April 1st through March 31st of the next year. And we got to the end of the year and we need to revalue what's in that account because we currently have a prepaid insurance balance of $18,000, but we've used April, May, June, July, August, September, October, November, and December's prepaid insurance policy up. That's 9 months. So when we get to the end of December, what we should have left is January, February, and March, the other 3 months worth of value of that policy. Say again, so that $18,000 policy is good for 12 months and we've just used 9 months of it. So if you take a look at the slides, as we recognize expense, okay, we're going to record the decrease to the asset with a credit to that asset account. Now that asset in this case is the prepaid insurance account. So you've got an example starting on slide 313 that I think will be incredibly helpful for this. And you've got examples for each piece of this and what we've gone over in the book. So your job on this is really going to be, as quickly as possible, identifying what resources you need to refer back to if you don't remember how to do a journal entry. As you look at the second journal entry in this case, you can see that the company's employee pay is what we're talking about. And if you go again to the chapter 3 slide deck, you can see on slide 332, we look at adjusting entries for accrued expenses. And the issue with accrued expenses, they're costs that we've incurred that are unpaid and unrecorded. And the example given on 334 is an example of a company who owes its employees money for the last 3 days of work in a period, and they don't have to pay them until payday, which is in the next period. Okay, so that's going to be very helpful for you too.